Okay, so there's no way to pay zero taxes on the dollars that you have unless you don't plan on ever buying anything with it. So, the original title to this video was going to be how to pay zero in taxes, but I changed it to how to pay less than. So one of the biggest things you can do is determine by where you live as to how much taxes you're going to pay. Now, some of the states that are pretty good about not taxing retirees too bad are obviously Florida, Texas, and what was that other one? Oh, Alaska is pretty good. And there's a lot of states that are really tax friendly to retirees. So go ahead and check those out, if you're going to plan on moving. If you're not going to plan on moving, then all you can really do is just figure in how much taxes you're going to end up paying in the state that you currently live in. So that's just, something that you're going to have to do. So another thing you can do in your retirement years or in your pre-retirement years is you can go ahead and invest in a Roth IRA. And, not all of your money, but some of your money in a Roth IRA. That way you have some flexibility to go ahead and figure out, well, I got so much that, like my wife and I, we take our standard deduction. So we have so much to like $29,000 a year that we can easily just pull out of our 401k traditional and, we can pay that. And our Roth account can make up some of that other money that we want, or bucket lists and things like that to keep those tax brackets down. But some other things you can do if you have a brokerage account rather than a Roth IRA is you can invest in municipal bonds. Municipal bonds are not taxed at the same as the federal rate, so you can save a little money there. Also, qualified dividend stocks. The qualified dividends are subject to actually not being taxed again. So by utilizing qualified dividend stocks, you can sell those dividends every quarter and go ahead and put those into your income stream. And those can be a solid way of bolstering up your income stream in retirement without having to pay, a lot in taxes. Okay, and we've talked about this a little bit already, is managing your income streams and where you take the income from. Like I said, if you figure out which tax bracket you want to be in, you can go ahead and figure out how much you want to pull from your traditional 401k, how much you want to pull from your Roth IRA or 401k, whichever it is. And you've also gotten your dividend stocks if you want to do that. You got your real estate streams, and you can figure out how much your taxes are on all those. Real estate can actually be a pretty decent way of saving some taxes on your money as well. Okay, and so when you get into your 70s, there's what's called RMDs, or required minimum distributions. And those are very important to your tax strategy because you have to pull those out of your tax deferred retirement accounts or your 401k, 403b traditional accounts. And those are going to be, taxed at that full rate. So you've got to figure RMDs into your planning when you're doing this. So if you like say are going to leave your 401k plan and you're just not going to touch it, when you hit your 70s, your mid 70s, you're going to have to start taking some of that money, and it's going to be quite a bit. So you really may want to look at drawing that amount of money down before you get into your 70s so that you don't have to pay all those taxes on that traditional 401k or 403b. So take a look at that and take a look at it closely, because that's something that I'm going to do. I went ahead and retired early, and one reason I retired at 61 was so I could pull some of that money down, and I get a few extra years off, so it's a good thing. So if you do have a large amount of money in a traditional 401k or 403b and you're getting towards 70, there are some things you can do. you can go ahead and start doing some Roth conversions, and that'll help you out a little bit. You can go ahead and donate to a charitable organization. If that's what you want to do with the money, you can donate some of that to a charitable organization, or you can simply buy a life insurance plan for your loved ones for later on. That's also a way of kind of getting around having to pay those taxes right away. Now, I don't know what the tax laws are for the person who is going to be the beneficiary of the life insurance, but it will at least put that amount of money into the benefit. So if this video has helped you out, I'd appreciate it if you go ahead and hit that like button and watch this video next.